Hello everyone, welcome to today's video. Without further delay, let us jump into the topic itself. As you can see on the screen, debentures issued as collateral securities are topic for today. So basically what is it? What is debentures issued as collateral security? So basically it means that when we are approaching a bank or any financial institution for getting a loan, obviously they will ask for certain guarantee, right, which you are already familiar with. Some of you are already familiar with loans, maybe the procedure to get it from banks and all. So obviously they will ask for some kind of guarantee, and guarantee is called basically security. So there are two types of securities to say. Main security, the main guarantee is there, that is called principal security, and additional guarantee that you give is called collateral security. Okay, so suppose it is a company, just imagine that it is a company that is approaching the bank for getting a loan. So obviously that company can give what? Obviously company can give uh, some kind of main security as a guarantee. They can give some main security as a guarantee, they can do that. Also in addition to that, they can give some other security or other security extra. That security is called collateral security, and as that collateral security, company can also give its own debentures. So if it happens, what are the entries or what is the accounting treatment for that? That is what we are going to discuss today. So collateral security, debentures issued as collateral security means instead of as an additional security, debentures of the same company is given for or by the same company to get a loan from bank or any other such kind of institutions. So that is what is called debentures issued as collateral security. Now it has two situations. One is when journal entry is not passed. First situation is called when journal entry is not passed. There are two kinds of treatment. When journal entry is passed, when journal entry is not passed, when journal entry is passed. So basically what is happening here is, so first we will discuss a situation. So just imagine that one company ABC Limited took a loan of rupees 10 lakhs from SBI. So what is the situation? This company took a loan of rupees 10 lakh from SBI, and it is also issuing 10,000 9% debentures of, I'm just quoting some amount, okay, of rupees 200 each as collateral security. Okay, so situation is what? We are taking a loan of rupees 10 lakh, we are giving 10,000 9% debentures. You know what is 9% rate? 9% indicates the interest of debentures, and of rupees 200 each as collateral security. So how should we record it? So the question is like this. I am not extending the question. Question is like this: when journal entry is not passed, how you will show it in the accounts? When journal entry is passed, how will you show this situation in the accounts? There are two situations or two ways in which you can show this in accounts. First way is called, or first method is called, when journal entry is not passed. Second method is called when journal entry is passed. Okay, when journal entry is passed. So here it is like this. Look, a loan of rupees 10 lakh from SBI. The first method, when journal entry is not passed, that means all this data or all these details should be shown only in the balance sheet. Obviously when you are taking a loan in company's balance sheet, we have to show it. Okay, company's balance sheet, we have to show it, that loan amount. Okay, so how we will record this situation when journal entry is not supposed to be passed? So in that case, so first case is when journal entry is not passed. What are we going to do, or how we are going to record it? So in that case, what you are supposed to do is, if this kind of question comes, you just have to draw a balance sheet, whatever you know, balance sheet format and all. We are not going to do the entire balance sheet. We need to only show the main part which is related to the question. So we can call it as an extract. So balance sheet as at whatever date. If date is given, you can record the date. So year this one year ending date and that particular year you can mention. Then obviously balance sheet format, particulars, then note number, then current year, whatever year it is, amount, next is previous year amount. Okay, particulars, note number. So what are we going to record here is, we will write like this: known current liabilities. Under that you will be writing long term borrowings. Long term borrowings. In note number I will be writing 1, and you will be showing in the current year column 10 lakhs. This is the only thing that you have to draw when they ask. That means balance sheet means this is the only balance sheet that you have to show. They may not say like exactly, okay, you show the balance sheet. Okay, so when they say, when journal entry is not passed, show the accounting treatment for recording this debentures issued as collateral security. First thing that you have to do is draw a balance sheet, write non-current liabilities, under that you write long-term borrowings, and note number 1, here will be showing the loan amount. Always remember, we will be showing only the loan amount, not the debentures amount. Loan amount only we have to show here. Okay, this is not done. We have mentioned something here, note number 1. So note number 1 means, again we have to prepare notes to accounts. Notes to accounts. So what are we going to do here? In notes to accounts, we will write note number 1. Okay, we'll be writing note number 1, and you will be writing for which amount you are preparing this note, long term borrowings. So we'll be writing long term borrowings, and you will be writing like this: loan from SBI, because in our question it is mentioned loan we have taken from SBI. That loan is coming under actually long term borrowings. We are writing like that: long term borrowings, loan from SBI. We'll be showing this amount here. Also, one more thing you have to write here: secured by issue of 10,000 9% debentures of rupees 200 each. This you have to show in the bracket, and you can close the notes to account. Very simple only. So when this comes, and if journal entry is not supposed to be passed, what we are going to do, we will draw a balance sheet straight away, and we will show non-current liabilities, long-term borrowings, and the loan amount there in the current year amount column. Why I wrote current year and previous year here? Because in balance sheet there will be 2 amount columns. One is related to the current year amount, and next is will be related to the previous year amount. It is I wrote like this, as date is not given. So current year and previous year will be written, and current year column you have to mention this 10 lakhs. Previous year column you can leave it as blank. Again, notes to accounts we will be preparing, because we have mentioned a note number here. I don't have to explain, I think, what is note number and all. So basically note number means it is just extra working note. You can just take it like that, but actually it is not working note. It is actually required along with all the accounts, all the statements that we prepare. If any statement values have extra amounts involved in it, you have to show it in the notes to accounts. Okay, so it's actually a part of balance sheet only. Okay, we are just calling it as working note, but it is not working note actually. It has a format in which we have to prepare the note to account. Legally we are preparing this notes to account. So in that we gave the note number 1 to long term borrowings. Then we are writing under that loan from SBI is actually called as long term borrowings. Brackets you have mentioned the details of the debenture that you have issued as collateral security. This is first method. That means where journal entry is not passed. I hope that is clear. Okay. Now coming to the second method, when journal entry is passed. When they say like this, when journal entry is supposed to be passed, what you are supposed to do here is, you have to prepare first a journal. In that journal, two entries you need to pass. You know journal format, I am not drawing the entire format. So with headings and all, I am just going to write the entries. So in this, two entries will come. First entry is for the loan that you are taking. Bank account debit to bank loan account. This is the entry for receiving the loan from bank. Received or took a bank loan. Okay. Second entry will be one new entry. That is why we are learning this method itself. Debenture suspense account debit to 9% debentures account. Debenture suspense account debit to 9% debentures account. In brackets you will be writing issue of 10,000 9% debentures as collateral security, and we will be mentioning the amount here 10,000 into what is the amount that is given in the example, 200 each. So obviously 10,000 into 200, 10,000 into 200, this is just an assumed amount just to make you understand. Okay, so 200 into 10,000, how much will come? 20 lakhs. Okay, here also 20 lakhs will be mentioned, and we will close this journal. This is what we are going to do first. Not done yet. We have to also show the balance sheet. Here also we will be showing the balance sheet. It's not like balance sheet is not there, only journal entry is there. The balance sheet as at whatever date is given, or just put blank, and you will be showing the same type of balance sheet that you have shown before. Particulars, note number, current year amount, previous year amount. I will be showing here again non-current liabilities. Under that you will be showing what? Long term borrowings. Against it we will be writing note number 1 here also. Here also in this method also will be showing 10 lakh only. There is no change in balance sheet, main balance sheet part. Okay, then we will prepare notes to accounts. Okay, notes to accounts. In that I am just drawing one amount column only. Some used to draw two amount columns and all. Particulars, amount, note number 1 is for long term borrowings. Same like the previous method, here also will be writing loan from SBI. Then you must be wondering, right, then what is the difference between these two methods other than some journal entries came? So it is not like that. Below that, previously we wrote the details of the debentures in debentures issued as collateral security in bracket. Here what we are going to do is we will not show it in bracket. Instead of that we will write like this: issue of 9%, sorry, issue of 10,000 9% debentures as collateral security at the rate of rupees 200 each. Okay, at the rate of rupees 200 each. We will be writing this 20 lakhs in the inner column. Then we will write like this: less debenture suspense account. Same 20 lakhs we will be writing here, and we will be showing nil in the amount column. So I will explain why we are doing like this. Instead of writing issue of 10,000 9% debentures at the rate of 200 each, you can just mention here itself rupees 200 each. That is the proper way. Okay, of rupees 200 each as collateral security. 20 lakhs you can show, and less debenture suspense account 20 lakhs. This is how you will be showing. Meaning of this thing is, actually when you are issuing debenture to someone, obviously technically they will become debenture holders, but these debentures which are issued as collateral security, as or those people who are holding it, obviously bank only, they will be having these debentures with them. Those people are not actually debenture holders. So to prevent them from being debenture holders, we are using an account. That account is simply called debenture suspense account. They are not debenture holders yet. That means, like other debenture holders, these people doesn't have any kind of right to receive the interest on debentures and all. So basically they are not debenture holders. Okay. Once we repay our loan, this is actually given as a security only. Once we repay the loan, they have to reverse this entry. That means we will be reversing this entry in our accounts. The second entry will be reversed. That means 9% debentures account debit to debenture suspense account. 9% debentures account will be debited and debenture suspense account will be credited once we repay the loan. So that also keep in mind. Okay. So basically that is the purpose by which we are using or we are writing like this. You must be thinking 20,000 you wrote and 20,000 you deducted. And what is the point in writing all these things? We are showing that we are using debenture suspense account to cancel the amount of debentures. Only that is the purpose of this. Okay. So understand the case clearly. So we have discussed two cases in the question. First case was when journal entry is not passed, and second case was when journal entry is passed, and we have discussed one example question. So 10 lakh was the loan, and we have issued debentures of rupees 20 lakhs. So what are we doing here? When journal entry is not passed, simply you have to just draw a balance sheet extract where you have to show long term borrowings and put a note number 1, and you have to mention the loan amount there. And notes to accounts, you just have to write what contributes to that 10 lakh, which is actually loan from SBI, and the brackets will be mentioning secured by issue of 1 lakh, sorry 10,000, 9% debentures of rupees 200 each. They will be showing that. And okay, so let's continue. So we will be recording it as loan from SBI and we will be closing this account secured by issue of 10,000, 9% debentures of rupees 200 each. We will be closing it. Then after that, when journal entry is passed, first you have to pass two journal entries. First entry is for receiving the loan. Second journal entry is for which one? Debenture suspense account debit to 9% debentures. Will be showing the amount of the debentures, value of the debentures that we gave as collateral security. We have shown it, and we will come to balance sheet again. Same like the previous method, we'll be preparing the balance sheet by showing loan amount alone. And in notes to accounts, additionally, instead of showing the details of collateral security in brackets, we'll be writing like this. The same content you wrote in brackets will be writing without bracket. Issue of 10,000, 9% debentures of rupees 200 each as collateral security. We'll be writing the value of the debentures in the inside column, and we'll be writing less debenture suspense account, because that is the account that we are using to cancel that debenture for now 20 lakhs. We'll be writing nil in the amount column. That means finally this amount, this of rupees 10 lakh will be going to which statement? Balance sheet. So in balance sheet also will be showing 10 lakh only because of this reason. If not, if there was no debenture suspense account, will be showing how much? 20 lakh rupees will be also shown in the balance sheet. Okay. So that is how this method works. I hope I made it clear. So all the best for your preparations, and keep following us for further topic related discussions and important topics discussions and all. Already we have shared some of the videos related to important topics that will help you for your boards preparations. All the best for your preparations. Once again, thank you.